Bank Nifty opened with a 1500 point gap down against me and I was carrying an ITM put short. But still, how did I end up with just a 3% loss for the day? Hello guys, I'm Paris the Options Guy and welcome back to my channel, and today I'm going to tell you how exactly I managed my position when the market opened 1500 points gap down against me, and how can you deal with such sort of a situation if something like this happens to you, right? Even if you do not trade or if you are new to trading, just understand what were the key things that helped me reduce my loss to such a small extent even though the market opened with a very big gap down against me. Now, basically, if you see, guys, first of all, let's talk about my put short position that I had taken, which had given me the big loss, right? So I took this put short position over here when Bank Nifty took support from this range, and basically I held on to it for basically, till basically this whole time. And then if you see in this put short over here, if you see, the premium, I shorted it at 428 something, and then it went down and made a low of somewhere near 150, right? But if you see, premium basically closed over here at 250. After that, that is when, if you see, Bank Nifty opened with a very big gap down, almost a 1500 point gap down. Why? Because of HDFC Bank and HDFC Bank solely, right? Because HDFC Bank had bad results, and because of that, market basically Bank Nifty opened with a 1500 point gap down. And at this point, if you are I was expecting that I would have 8 to 10,000 loss also very easily, because a 1500 point gap down is a very big gap down, right? So anyways, actually the premium opened very low, right? The premium opened just somewhere around 800, right? The first few ticks were somewhere near like 700 also, right? But premium opened only around 800, which was very good, because I was expecting that the market would open, the premium would basically open somewhere near 1200 or 1300, right? But premium only opened around 800. And if I could show you guys the chart over here, if you see somewhere near 800 over here, the premium had opened. Just ignore this opening price over here. But yes, the first few ticks were somewhere near over here. Now, the first thing that you need to remember is, if the market is opening with a very big gap up against you, do not wait for an exit. Do not wait for the market to reverse or get into your favor so that you can exit at higher price. Because if I wouldn't, I would have, I will show you my orders right over here. If you see, the order that went was near 915.49, right? Basically, as soon as the market opened, I waited for just a few seconds right after the market opened, and then I took an exit very fast, because after that, if you see, 800 never ever came, right? Throughout the day, the premium just kept going up. It went up till 2140 rupees. Keep that in mind. It went up till 2140 rupees, right? And I exited at 831 over here, basically somewhere near over here, right? If you see, 831 rupees, and that was very good. So one thing is that never ever wait for the market to come in your favor if it is opening with a very big gap down, right? Your stop loss is hit, it has opened more than your stop loss, right? Like more against you, even more than your stop loss. So don't wait for the market to come in your favor after that, right? Just take an exit and accept the loss. Do not wait for it, because let's say you were in the same position as me, right? You wouldn't have gotten a single exit point, and if I would have waited a few minutes more, this loss would have basically been double. This 6,000 rupees, it would have been doubled. And if you see, I had gotten some profit from my hedge also, 1500, right? This would have actually gone down, right? The premium on the hedge would have gone down, and my loss on this would have basically been doubled, right? So that's why never ever wait for the market to come in your favor, because if I would have held it, it would have probably, the loss would have probably been 8 to 9,000 very easily in just the next few minutes over here, right? So that's one thing that you need to keep in mind. Second thing was that I then decided to not go against the trend, even after seeing such a big buying that came in right in the spot. I remembered that the market has opened with a gap down, and chances are market will not recover so fast, because HDFC Bank has opened with a gap down for a reason, right? The news is bad, and so it has opened with a gap down for a reason, and that's when I decided to take a short position in call short position. To I decided to take one try over here with a very small stop loss, right? And then when I saw that market has started to make negative price action, I went ahead and took a short position in this candle, basically, right? If I could show you guys over here, I will show you guys over here. Yes, over here at 233 I took a short position. My stop loss was just above this candle's high, right, at 250, 251. So basically less than even 20 points of risk over here, 18 points of risk. And then my target was basically 60 rupees, but I decided, we've already had a very big loss. Let's just take this profit, let's just close our day, and let's just, sort of chill, right? Because whenever you are going through such a big loss, it's not first important to recover your loss, right? It's first important to keep your psychology intact, and to keep your psychology intact you need to take a little bit of break, right? And when I got most of the profit from that, I decided to close my day. And in that trade I got 2300 rupees, and basically my loss got less than half after that trade. So I was happy, and I decided, you know what, it's just 2000 rupees, right? I can basically, in one good trade, I can make double of that, right? So that's why I decided to close my position for the day. And so I want you guys to remember is that never ever go against the trend. If I would have still decided to take a put short position thinking that, oh, this is such a big candle, oh, market is near 46,600, 500, whatever, this is a very good support, market would have just gone against me throughout the day, and I would have lost even more money, right? So that's why I decided to take a very small risk over here, right? Just as I said, just 18 points of risk over here, and I decided to, go ahead and take a short trade over here, because again, a call short trade, because as I said, go with the flow of the market. Already market has opened with a 1500 point gap down, a lot of momentum has already happened. Okay, no problem, what can we do afterwards? And whenever, okay, so whenever you know that you are going to have such a big loss, right? Like yesterday, if you see HDFC Bank's shares in New York, basically in New York Stock Exchange, were already down 6 to 7%, right? And so it was known that market will open with a very big gap down, right? So that's when you have to plan, right? That's when you have to already plan and decide what you are going to do after the market opens, right? Basically after the market opens, but you have to plan it before the market already opens. Okay, market is opening with a very big gap down, this is the loss that is expected, right? And this is how this is basically what I'm expecting to happen, right? What after that? What can I do after that, right? So these are the things that you have to plan. Now I knew that the market has opened with a gap down, that means throughout the day the market will most probably continue to move down, right, after maybe seeing a little bit of pullback. So that's when I decided to take a short position as soon as I saw that market has started to make negative price action over here, right? I didn't short over here itself because the stop loss was very big, right, in the first candle. So I waited for a little while. I I I waited so that I could get a small stop loss, right? And over here, and then I decided to go ahead and take a short position. And again, you could have said that why didn't you short? I shorted 46,800 call option, right? Now some people would say, why couldn't you have shorted 46,500 call option? Because right now, as I said, it's not about recovering your profit in a single day, right? It was more about just, trying to get a little bit of profit if it is easily available in the market. Now if the market has opened with a very big gap down, and I've seen so many gap downs, right? What happens after market opens with such a big gap down? So I decided maybe this is a little bit of an easy trade that I can take, which can get over fast, so I can recover just a little bit, right? We will take one single try, and if it works, it works, or else we'll close our day, right? And that's why I decided, so okay, which premium will give me the fastest, basically my target, right? If I would have shot at 46,500, maybe the target might have come over here, right, somewhere over here, or maybe afterwards, at the end of the day. Now if you see, right, even if it's me, right, anyone, if they see a big loss, basically this the loss that I was seeing was somewhere near 4,500, which was my biggest lifetime loss. To be very frank, it was my biggest lifetime loss, right? A single day lifetime loss, right? So anyone who, be it anyone, right? Even if you're experienced, you will face a little bit of stress when such things occur, and so you don't want to be staying in the market and getting more tensed, right? So that's why I decided, okay, is there a quick trade that I can take which has a very small risk, and so I could take that trade and get out, maybe make a little bit of money and recover just a little bit, right? And so I decided to short 46,800 call option. I got my premium down. Basically by 11 I was out, right? So something like just an hour, I took this trade for an hour, and yes, I shorted this premium, if you see, at 233 over here, right? I exited at 74 at 11:21. So basically just 1 hour and 20 minutes, and that's it, right? And so I hope you guys understand that even sometimes there will be these types of scenarios where the market will open very much against you. But first of all, you need to see what type of overnight risk you're taking, right? Even if, let's say, this premium would have opened at 1200, right? What would I have? 8,000, 7,000, 9,000 loss, right? I can recover that in two good trades, right? So always keep your risk to reward in control, right? Even if there are events like this, like one maybe once in a year event like this, where the market opens with such a big gap against you, right? Against you, market has opened with a big gap in my favor also, but sometimes market opens against you. Then what do you do, right? So you, sometimes these things will happen, and these are times where, and you don't really know, right, when these things are going to happen. So that is, in those times, always keep your risk to reward under control, and then trade, right? And then take an overnight risk. Now I have just have 2,000 rupees of risk. Now I can basically cover this very easily, right? Just 3% of risk. Tell me how many days the market will open 1,500 points against me, right? Not a lot of days. When was the last time that this happened? I think in the Russia-Ukraine war in 2022, right? So that's basically 2 years ago, right? But even in a 1,500 point gap down, if I can exit with just 3% loss, this is like, I think, a 3.2% loss on my total capital, if you see, right, which is somewhere near 70,000, right? Maybe a little less, but yes, with just 3% loss, if I can exit in such a sort of a black swan event, I wouldn't call it a black swan event, right? But such an event which does not really occur very much, right? So that is very good. That is the sort of risk control that you should have in your trading. So these are things that will help you stay in the game for the long run. Now I can recover this 3% very easily, right? I will need one trade and I'll recover more than that, right? Maybe tomorrow itself market comes a little bit up, and then I take a maybe a call short position over here somewhere, and then I make good money, right? So that's why I hope you guys understood a few concepts about how to trade and how to manage your risk, right? And there are some types of risk, as I said, again, the overnight risk. A lot of people do not really take into consideration the overnight risk. A lot of people will be like, oh, only risk to reward, risk to reward. But the overnight risk is also something that you need to keep in mind, right? Now, if I cannot say that, oh, now market opened at 800 points, right? The premium opened at 800 points. I cannot say my stop loss was at 450, 460, whatever. So I need an exit over there. No, that does not happen, right? Now, the market has opened so much down. What can I do afterwards, right? One thing that you could have done is, maybe now I took a 46,700 put, right, which was 1,500 points away as a hedge for this position. I could have maybe, taken it a little more closer. I would have made a little more money over here. So my loss would have been a little more less. But I hope you guys understood how to manage your risk, and in such events where the market is opening very much against you. I could imagine some of you guys who would be watching this video, that you must have also taken some sort of a bullish position in Bank Nifty over here, right? Maybe if you saw that Bank Nifty is consolidating over here, Bank Nifty has given this sort of a recovery, maybe Bank Nifty will again go up, right? So yes, so again, it's not wrong that I took a short position over here. It would be wrong if I would have held it throughout going down, right? It would have been wrong then, right? So that's why it's not wrong if the market goes against you. It's wrong if you do not know how to control your losses, right? So I hope you guys understood, and I'll see you guys in another video. I hope you guys like this analysis of my trade of my day, and I hope you guys could take some things with this, which could help you further in your trading. Thank you for watching till the end.